Hi, Niro Pillay here from Investment Rise, and I'm sure you've read by now that things are starting to change in our property markets. Our two hottest markets for the last few years, Sydney and Melbourne, are showing signs of cooling. There's talk of oversupply. Rates are starting to rise, independent of RBA movement. Vacancy rates are on the rise in certain suburbs within Sydney and Melbourne. So things are definitely changing, and I'm getting a lot of questions at the moment with people going, look, Niro, my friend bought 2-3 years ago and they've made a lot of money, but they just bought pretty much whatever they felt like buying. But it's different now. And what would you advise someone who's entering the market for the first time in 2017? You know you need to invest in property because despite the fact that interest rates are rising on loans, savings rates are still at record lows because the RBA hasn't moved. And even if they do move, you're still not going to be able to save your way to $1 million or to financial abundance and freedom and security. So you need to look at property investing, and there are still some great opportunities out there, but you need to do things differently. So for those of you who are looking to enter the market and are a little bit confused, I really hope this next couple of minutes helps you. So what would I do if I was a newbie investor starting again from an investment perspective? The first thing I would do is stay well away from the apartment market. Wherever you read, everyone's talking about oversupply, and there's a lot of uncertainty as to what the impact will be on apartments in all of our capital cities. I think every city will be affected differently. I don't think any city is really going to grow in value in the apartment market going forwards, unless of course you're looking at the higher end market, the boutique areas where you can still afford, you can rather get a property, an apartment for $1.5 million. But if you're looking at the average apartment price point, I think you need to stay away from that. So then what does that bring you to? Well, then at number 2, it brings you to focusing on something with land, whether it's a townhouse or a house. But very quickly I go to number 3, make sure it's something you can afford. And when I say that, not just from a perspective, the bank will give you the loan, well, that's fantastic, but more importantly, from a cash flow perspective, can you afford the loan? What happens if interest rates rise? Because as I said earlier, we're in a rising rate phase of the cycle. So make sure it's something you can afford. Don't overstretch yourself. Then number 4, stick to capital cities. At the moment, it's happened time and time again. We see Sydney and Melbourne boom, and a lot of people say, look, I couldn't afford Sydney and Melbourne, or I miss Sydney and Melbourne, I want to go regional. Cash flow returns are so much better. Yeah, sure. But look at the data, look at where most of the money has been made. Our capital cities have always outperformed regional centres over the long term. Sure, there are short-term blips, I understand that, but property investing is a long-term game. So I'd be looking at capital cities. And then you're trying to work out, well, okay, Sydney, Melbourne, can't afford a house here, stay away from the apartment market. Where should you'll be looking to go? Study population movements. At the moment, Sydney, we're getting a lot of population from overseas that's still coming in, yes. But our domestic migration out, so people from Sydney who are leaving Sydney for various reasons, jobs and affordable houses, that number is greater than the people who are coming in to Sydney from overseas. So when our population isn't growing anywhere near as fast as it used to, does that tell you something, especially when there's still so much supply coming on board? So definitely study population movements. And finally, get some help. I have said this for a long, long time. I believe property investing is a team sport. Sure, in a booming, crazy, hot market that we've had in Sydney, Melbourne, anybody could make money if you just get into the market. I understand that. But going forwards now, we're going to see all kinds of changes. We're going to see in the same city, certain suburbs perform differently to others, which is the way it has been always prior to 2012. We're going to see the apartment market perform differently to the house market. We're going to see a number of different changes even within suburbs, and so you really need to be either doing your research if you can, if you've got the time and the expertise and the experience, great. Otherwise, get some help, get someone who can show you the way, guide you accordingly, and so that way you can move forward, take advantage of some of the great opportunities that are out there, but also avoid the stress, minimize the risk, and do well. If you've got any other questions, I'd love to hear from you. Let me know in the comments fields below, or let me know what you think about this little 7-step formula that I gave you to sort of just navigate the uncertain environment that's coming towards us right now. I'd love to hear from you. Bye for now.